Hello and welcome to BQ Prime. A very good morning to all the viewers. It's a day heavy with earnings, and we are at the fag end of the earnings season. And one real estate company that is in focus is the Prestige Estates. Overall, the revenue seen a growth of around 10%, a good uptick coming in from an operational perspective. If you see the margins at 25.9 versus a 20.8. There has been a dip in terms of profitability, but it's above what the street was estimating. And you have Prestige, who's gone ahead and bought out DB Group's balance stake in two Mumbai projects for 1176 odd crores. Joining us on the show to discuss more on the same is Irfan Razack, Chairman and Managing Director of Prestige Group. Irfan, good morning and welcome to the show.
Morning, Hiral. How are you?
I'm good, thank you. Irfan, my first question coming to you is, clearly if we see in terms of the kind of trajectory we had with regards to FY23 in terms of the pre-sales, we've absolutely, the company has exceeded that, right? Overall, have the numbers met your internal expectations?
Hiral, actually, though we were targeting 12,000 crores and above, internally we had a bigger target. We didn't achieve that only because we couldn't launch a lot of projects which were in the pipeline. But nevertheless, we have to keep something for later. I'm glad that we at least crossed what we had promised to the world and crossed it nicely. And I believe then this coming year, we should do 25% more than what we've already done this year. So there will be a big uptick on that also because we are quite confident. So whatever was left out for this current year will come into this year. Previous year will come to this year. And it will give us larger numbers from all cities that we are working in.
Right. So in terms of what you're saying is a 25% uptick to the existing 12,000 odd crores that the company has done, right?
Exactly. Thank you. Yes, that's the idea.
Right. So overall, from there on, if you have to break it up between various regions, where are you expecting the growth to come in from? Because clearly MMR, which is a new region which the company has entered in the last couple of years, you've already managed to take around 20-21% of the sales booking from there.
Yeah, I mean, I think since Bangalore is a strong market for us, so we'll definitely get large numbers from Bangalore. And we do have a very large development in Hyderabad under approval. Once that also comes in, that's bound to give us quite a large amount of numbers there. Chennai, again, there's a big development that's under approval in the final stages. Even we've been working on that for quite some time. Even that should see the reality. So these are the three places where a lot of numbers will come. And of course, Mumbai will be steady. And we are planning 2 launches also in Mumbai and high value ones. And we do hope the market will support that high value. And with the existing product that we have in Mulund, that's a Prestige City, I believe that there is a good round off and expectations are pretty high. And we do believe that the market is still pretty strong to absorb residential, and the people are committing themselves. And we are having some strong sales across the country in all the regions that we are. And there's one more region that we have been working on for some time and the approvals really didn't come, was in the NCR. And if that does happen, that also will add up to the kitty. So it's a well-rounded portfolio. The efforts are on and the team is working hard on this, and I'm sure we'll get the results.
Absolutely. So Irfan, as you mentioned as well, FY23, almost 26 million square feet is of worth of projects is what the company launched. Now, in terms of FY24, what's that number looking like with regards to the launch pipeline?
No, we do have a large launch pipeline, and I think we'll exceed the current year's 23 million. And the numbers are still getting worked out. Like I said, we've got half a dozen projects in Bangalore, a single project in Chennai, a couple of large projects in both in Hyderabad as well as in Mumbai. And this will bring in the roundup, and maybe it'll go upwards. But the good part is, apart from the launches, we are also completing. So you see, as we are launching more and more, it does just adding up more and then not completing. will put the stress on the system. So
Hmm.
we are consistently and steadily completing a lot of projects, especially now in Bangalore and in Hyderabad. Of course, Mumbai completions will come only in the next 2 to 3 years. And as we go along, maybe the high-rise ones will take that one more year extra. But there's a steady focus to see that whatever we are doing, we also should get to the end and complete that, deliver that, and that gives the confidence to the team. Especially, I am very focused to see that whatever projects I've launched in Mumbai, those get completed, and then that confidence comes in the team and in the customers.
Right. So overall, Irfan, from an execution perspective, as you mentioned that the focus is also with regards to deliverables, how much in terms of million square feet are we expected to deliver in terms of completed projects in FY24?
See, now, if you ask me what we've delivered is, see, right now we have 48 million square feet ongoing, and we have about 76 million, which is under planning and upcoming. So if you add these two up, it almost goes about 100 plus million square feet. But our steady and expectation is that we do keep delivering about 25 million square feet at least a year. So that sort of eats into whatever we've been launching. So it balances it out. And some large projects in Bangalore also getting completed. Hyderabad, they're getting completed. And that will add up to the overall completions. And same way, we will also similarly will be launching some of the projects. As I said, we have these 78 million square feet that we've been working on, and all these projects will come up in the next year, of a maximum the following year.
Right. Now, if you have to divide the overall, system between commercial as well as residential, what is the strategy looking like for the company with regards to commercial real estate? Because clearly there is an acquisition in two commercial SPVs that has happened as well, in terms of the DP Group property offices. So, what's the strategy there?
Now, see, now these two commercial properties that you're talking about, this deal just happened yesterday. We were 50%
Hmm.
shareholders, both BKC as well as in the Prestige in Mahalakshmi. Our landowners had certain commitments on payment of premiums and few other deliverables, which they kept on doing. And of course, certain times we had to chip in to see that this happened. So we felt it was a strategic move to see that whatever we had paid, we sort of used that to take over the equity of this balance 50%. However, having said that, the outflow will not be too much there because there are certain amounts that were already given as an advance. But the more important part is they also have an emotional attachment to these properties. So we've also given them an option. Once these properties are ready, and in case they wish to come back and take a certain amount of space in these properties, they are welcome to at predetermined pricing, the market price, and whatever the guideline value is at that time. And they have an option, not everything, but a certain amount of space. So that is it. Of course, they have to pay for it, and that's how the whole deal has been structured. And it's a win-win for both. It gives us that much more flexibility to move faster. They have their deliverables which they have already done, and they'll have to continue to do certain times of certain things they still which are pending. And it's a good partnership. It's a healthy thing that's happened. It's a win-win for both, and I'm sure both parties will be happy with this arrangement.
Okay. So overall, as you mentioned about the office space as well, how are you looking at it from a annuity business model perspective? What's the kind of revenues we are looking at? Because that's something as a company that you are scaling up. Does that mean that the capital costs also will be high?
Yeah, I mean, yes, once you're developing for annuity, you definitely need that much more
Mm,
capital. You're not doing starter sales, you're holding on to the asset. So now you need to pump in money for construction, Definitely there'll be a requirement of capital. So what we are strategizing is to try and get certain amount of money as debt and mix that up with our own equity from our cash flows that we get from our residential business. Of course, now having said commercial is just not office that we are doing. We are building malls also, and we've just completed our Forum Falcon City, South Bangalore, and it's trading beautifully. It's well received, and it's a million square feet plus mall. We are now just getting the our mall in Kochi, which is just ready. Hopefully, we'll inaugurate it as soon as we get the occupancy certificate by the end of this month. And then we also have a whole host of retail assets, malls getting under planning, and which will come up year after year. And then we are also in the hospitality segment. Hospitality, in April, we opened our Mulberry Shades, another resort near JW Marriott in Prestige Gulfshire. And we are building more hospitality assets, especially a large one in Delhi, which is in the Aero City. And that will be the largest one in the country. So it's an ongoing process. So while we are doing all this, there has to be a mix of debt and equity. It can't be only debt, or it can't be 100% equity. So we are balancing this, and we've had some good cash flows last year, and I'm sure we'll get a lot of positive cash flow even this year from our residential business. And we'll play it by ear and see how, if there's any need for raising fresh equity also, we shall do it.
Right. So the option will be more towards equity versus raising debt, right? Because clearly, as a company, we've always followed the asset-light model.
Yeah, it's a mix. I mean, it can't be only equity, it can't be only debt. So as long as we're able to balance this properly and not let debt spiral, and then that will come and swallow you. At the same time, we just can't rely 100% on our internal accruals. I mean, we've always followed a balanced game, and I think that's what is even enabling our success on that.
Right. And my last question, Irfan, coming to you is specifically from a Bangalore housing market perspective. Now, that is your home ground overall, right? Now, taking the soft tech job environment in Bangalore, are you seeing any impact, just to get a sentiment check from, versus how the other markets are?
No, I mean, this is contrary to what people are, sort of perception. The on ground is that there is a lot of demand. Now you can take this demand, you can call it, maybe certain players are getting more demand than somebody else. It also depends on your location, on the product, and the pricing itself. And as far as we are concerned, whatever we are launching, it is getting lapped up. There is a demand, and there is actually a vibrant demand. It's not that we have to really do hard sell. So there's no hard sell required at all. And I keep telling my sales guys, I said, you have an easy ride because of the past performance the company has done, the brand that we built, the confidence in the brand. But if you ask me, the mood is good. People are committing themselves. There is a real need for housing, and of course, you may in this whole euphoria, you may get in some investors also. But all in all, it's always been like that, and it's a rounded demand. And I believe that this demand will continue for a good product, good location, and a good brand. I think things will be good. The times are good, and we would like to cash in on that.
Right. So it seems the story looks intact from here on across parameters. It's going to be an interesting ride for the real estate space as well, because in spite of COVID, in spite of being on a very high base, we are still seeing good growth coming in across the industry. Thank you, Irfan, so much for joining us on the show and giving us those views. Congratulations, and good luck for the coming quarters and new launches as well.
Thank you, and lovely talking to you.
Absolutely a pleasure always. Thank you. Stay safe.